Welcome to the Deep Dive. We're here to cut through the static, pull out the core insights, and get you the information you need fast. Today, we're diving into Perion Network Ltd, that's ticker PERI, and their Q2 2025 earnings call. Our mission here is, well, threefold, really. First, boil down those key financial results, and spoiler alert, it was a very clean beat. Second, track this huge strategic shift they're making, the whole Perion One platform story. And third, pinpoint the growth drivers we should be watching for the rest of 2025. It really feels like a story about a company tearing down the old structure to build something much, much bigger.
And, the market definitely seems to be noticing that rebuilding effort. Shares popped, 6.7% on the day. That suggests some real confidence brewing, even before digging into the numbers. Which, speaking of the numbers, the headlines were pretty strong. Non-GAAP EPS hit $0.26. That really blew past the Street's Fed 17 consensus by a solid 9 cents. And revenue came in at $103 million, which was comfortably above the $100 to $101 million consensus. Call it about $3 million higher.
Okay, hold on those. A great beat on earnings, sure. But total revenue was still down 5% compared to last year. So why the big positive reaction in the market? If you're just looking at that top line, it kind of looks like they're still shrinking a bit. What's the underlying story?
Yeah, it's all about the pivot.
Yeah.
And the financials showed they're managing cash really well while making that shift. I mean, look at the cash flow. Operating cash flow, OCF, was strong, $21.3 million. And adjusted free cash flow, FCF, right there with it at $20.7 million. That's converting earnings to cash very effectively.
Right, and that cash is basically the fuel for this whole transformation. And maybe the most important number backing up that bullish view was the return to growth in the main part of the business. Advertising solutions revenue, it actually grew year over year again, first time since Q3 2023, up 8.3%, and that's, 78% of their total revenue now?
Mm-hmm.
That seems like the proof point everyone was waiting for.
It really feels like a turning point.
Yeah.
And okay, sure, the overall profit numbers like adjusted EBITDA, $7.1 million, a 7% margin, might look a bit low at first glance, but you got to look at the unit economics.
Mm-hmm.
The contribution ex-TAC margin held steady, a very healthy 46%.
Okay.
That stability tells you they're investing hard in the future stuff, like that AI platform, but they're not messing up the basic profitability of their current customer deals.
So let's break down that ad solutions segment then. Where is that 8.3% growth actually coming from? And where's the drag still hanging around? What are the undeniable growth engines right now?
Well, the speed in some of these areas is pretty impressive. Digital out-of-home, DOOH, kept up its strong run, grew a massive 35% year over year. That's $17.6 million, now 17% of the total revenue.
Wow, 35%.
Yeah. And retail media is speeding up too, up 27% year over year, hit $22.3 million. Even the traditional web revenue, it showed some strength, up 5% year over year, bringing in $53.1 million.
Okay, so strong growth in key areas. But what about the segment that's caused shareholders the most grief over the past year or so, that search revenue headwind?
Right. Search revenue is down 35% year over year. $22.4 million. And yeah, like we know, that's the hangover from losing that Bing distribution deal back in 2024. But here's the really critical piece of context, I think, for listeners. Management basically said something that takes away the biggest anchor on the stock. They think this segment, search, is going to stabilize right around these revenue levels each quarter going forward. So think of that $22.4 million as kind of the new floor for search.
Huh. Okay, so if search has found its floor, that lets the whole story shift to those growth areas we just talked about. Makes sense. But before we jump fully into strategy, what's the update on connected TV? CTV, that's a key future piece, right? But it actually declined 5% this quarter.
Right, yeah, good catch. Management chalked that up to budget shifting. Moving into the second half of the year, that happens sometimes in ad tech. They're still very bullish on it. They expect CTV growth for the full year to really beat the forecasts, like the eMarketer one that says 13%. They seem to be thinking closer to 20% annual growth, basically betting their tech grabs those budgets when they land later this year.
Okay, so that sets the stage for the future strategy. And this is maybe the most interesting part of the deep dive, this Perion One platform idea. The CEO talked about this massive gap in the market, an opportunity he pegged at nearly $1 trillion in digital ad spend. Can you unpack what that gap actually is?
Yeah, it's a pretty good analogy they use. Think about chief marketing officers, CMOs. They control these huge budgets, right? But they don't really have one central platform that focuses purely on outcomes. Like, think how a chief revenue officer has Salesforce for the sales pipeline, or a CTO has Jira for product development. CMOs don't have that single go-to tech stack that connects ad spend directly to real results like store visits or actual product sales. Perion One wants to be that system.
So the operational brain for the CMO. Got it. How does this Performance CTV launch fit into that? How does it show they can actually build this thing?
This is the key innovation right now. CTV, historically, it's been mostly about brand awareness. Get your logo seen. Great for that. Terrible for proving ROI. Perion's trying to flip that. Make CTV a full funnel channel focused on ROI. They're plugging in their performance algorithms, their cross-channel tracking, basically proving that the ad someone saw on their streaming device actually led to an outcome. And that directly targets this huge U.S. CTV ad market, projected over $36 billion by 2026. If they can make that spend truly accountable, they unlock a massive new source of budget.
The concept makes sense, but what proof do we have now that the market is buying the platform idea, not just, liking the individual ad pieces?
Well, you look straight at the early results from that AI company they bought, Greenbids. They've wrapped it into what they call the Perion Algo solution. And get this, within 3 months, they booked over $1 million in deals just from existing customers signing up for it.
Wow.
That's really powerful. It shows these high-value parts like the AI optimization, they're sticky. And clients are willing to buy the new tech to add it on. That $1 million isn't just revenue. It's proof the Perion One suite is getting real commercial traction, like right away.
And it sounds like they're being pretty clever about expanding globally, too, using certain segments almost like a Trojan horse for the whole platform.
Exactly. Their programmatic DOOH, the digital billboards, it's growing internationally. New deals in Asia Pacific, specifically Korea, and in Europe, Germany, Italy. And they explicitly said they're using that DOOH expansion as a strategic foot in the door. Get in with DOOH, then cross-sell the whole Perion One package, including Perion Algo, into those new markets. It's a smart, low-friction way to eventually make a much bigger platform sale.
We should probably touch on the operational side, too, because you need efficiency to pull off this kind of big shift. They brought in a new COO at Perion, right, with a specific goal around efficiency using Gen AI.
Yeah, absolutely. And deploying Gen AI across the company, HR, running campaigns, everything, it's not just, a buzzword for them. It's about getting operating leverage. It means they think they can grow revenue a lot in the future without needing to hire tons more people proportionally. That's key to boosting efficiency long-term and keeping that contribution ex-TAC margin solid while they grow like crazy.
Okay, let's shift to the forward look then. Despite all the market swings and this big internal pivot, management seemed pretty confident. They stood by their full year 2025 guidance, reaffirmed revenue of $430 to $450 million, and adjusted EBITDA of $44 to $46 million. What does that continued confidence signal to you?
It signals they have pretty good visibility into the second half, driven by those growth segments we talked about. And those CTV budgets they expect to land. And that confidence is backed by a strong balance sheet. They've still got a solid cash position, $318.5 million. And they were putting capital to work in Q2, used about $33.4 million to buy back shares. Plus, they still have another $38 million left on the current buyback plan, which they sounded eager to use soon. Putting cash into buybacks like that, it definitely signals that management thinks the stock's cheap relative to where they see this strategic pivot going.
And besides the buyback, what's the plan for the rest of that cash hoard?
Well, they mentioned they're actively looking at M&A, acquisitions to speed up growth, grab more market share. It suggests they're ready to buy capabilities that fit into that Perion One platform, not just rely on building everything themselves. They did clarify one thing, though, in the Q&A. Near term, the focus is squarely on mid-market and enterprise clients. Those self-serve tools for small businesses. Planned? Yes, but explicitly at least a year and a half away. So don't expect SMB growth to be a near-term story.
Got it. And finally, the really long view. Management sort of addressed the elephant in the room, the potential risk that AI search completely changes web traffic patterns over the next few years. Why is shifting towards CTV and DOOH the answer to that?
Because it basically future-proofs their business model, or at least that's the idea. If Google or Microsoft totally change how we interact with the web using AI, that could hurt traditional web traffic and publishers. But by shifting focus to channel agnostic, outcome-driven advertising, closed-loop channels like CTV, DOOH, retail media where you can track results, they position Perion as the essential tech layer that connects the marketer to the outcome, whatever the channel happens to be. They're betting on being the accountability layer, not just being tied to one specific way people find information.
Which brings us perfectly to our favorite segment. Time to take everything we've just chewed over and try to spin it into a potential trade idea. Okay, but first, the big flashing letters. This is not financial advice. Absolutely. Standard disclaimer applies. But If you were pitching this, hypothetically, to an investment committee, give us an outrageous but plausible trade based purely on the signals from this call. All right, the thesis is long PERI, and the bet is that this platform pivot really hits critical mass in the second half of 2025.
The plausible part, it's pretty clear. Ad Solutions is growing again, first time in ages. Search seems to have found its floor. They're actively supporting the stock price with that $38 million buyback authorization.
Yeah.
And that Performance CTV launch, it targets a huge multi-billion-dollar shift towards accountable ad spend. That's a major potential catalyst right there.
Okay, that sounds plausible. So where's the outrageous twist? What drives a real re-rating of the stock?
The outrageous part is betting that the Perion algo cross-selling the Greenbids integration accelerates exponentially. That $1 million in deals they booked in Q2. We're betting that's just the tiny tip of the iceberg. This is the moment the bet goes that the market finally recognizes the platform synergy. We bet the market stops seeing PERI as just some legacy stock exposed to search risks and starts viewing it as this emerging AI-powered CMO platform. And as they scale that $1 million booked revenue into something much more substantial and recurring, the market rewards them with a significantly higher multiple because they're seen as an essential platform, not just a collection of ad tools. That is definitely a narrative shift to watch for. So the key takeaway from this deep dive, Perion put up a clean beat on top and bottom lines. But maybe more importantly, that big strategic pivot. It's starting to show real, tangible results. Ad Solutions growth is back, Greenbids integration is getting early wins, and the final thought to leave you with really is that fundamental question the CEO raised. If CMOs truly don't have a unified outcome-focused platform today,
Just how high is the ceiling for the company that successfully builds the definitive tech stack for that nearly trillion-dollar market? It's definitely an outcome-focused world we live in. And the value of the platform that can actually prove the ROI, that's only going to go up.
We'll certainly keep tracking how this plays out in the second half. Thanks for joining us for this deep dive. We'll talk soon.